Good morning, everybody. It is March the 11th, 2016, and what a day we're going to have today. Yesterday, Treasuries got slammed and sold off of the action of the European Central Bank. Equities initially rallied off of that, but then got sold heavily, only to recover and come back overnight. So what is consistent is that Treasuries are lower. They found selling about where we thought they would get it. We had a 23 to 27 sell in the 10-year last night, and the high I believe is 24. So this consistency of following fundamentals and what logic dictates, it is to me the major appeal of Treasuries. Plus it will retest support and resistance usually to the tick. So we're dealing with heavy selling yesterday off of news and selling overnight with a B pattern. So I think the first trade of the day is a sell. And it's pretty damn aggressive. 15 to 19, sell 1. I mean, and then sell 2 will be 23 to 27. Resistance really starts at the 20-24 area. The closer to 20 we can get it, the better off we'll be. But the market may not give us that chance. We don't have any news to drive the trading today. So I think it's just going to be down to the direction of the E-mini. We're going to put, because we are pointed lower, buy 1, 5 to 9, buy 2, 29 to 01. And I'm going to put a question mark at 13. We do have a 2-tick tail right here. The tendency for the market is to pause after an auction because the major players have been sidelined. Import prices minus 0.8%. Export prices minus 0.5. And Baker Hughes rig count. I didn't see any guesstimates for this. In fact, they didn't even post last week's numbers, so we'll put a question mark there. None of this news will play. It'll be down to the direction of the E-mini in my opinion. Looking at the 30-year, trying to look at it. Keep rearranging my charts. Okay, don't know where the spread is just right now, so I'll redo that. Similar situation in the 30-year, but it hasn't sold off as much, and the 30-year auction was the best auction we had during the week, so we'd expect the knob spread to be riding a little higher today and be given the selling in Treasury. So we have the 30-year being bought. So I think it is a B. We do have volume over time. This isn't as weak a profile because of that, and the skewing only has to be 1 tick. What that tells you is that people are willing to pay up to get long, and that's not natural behavior. Natural behavior is you want to buy on the cheap. So 1 to 5 will be buy 1. We'll be a little more aggressive on the buy side, and then 21 to 25 will be buy 2. On the sell side, 15 to 19. Then we'll make it 27 to 31 for sell 2. Looking at gold. Last night we basically wanted to sell the 75 to 80 area. We did get strong buying in Globex, and they ran it up to 87. All this was in Globex. Then the selling started in Asia at 79. and in London at 73, and we're currently at 65. So 69.71. I still think gold will be bought, but it can sell and it can move lower. So 45 to 50 is best support, and right now 80 plus is resistance. So sell one is 69 to 71, and then 74 to 76 for sell two. On the buy side, 61 to 59, buy one. And then 54, 56, buy two. And we'll see if the risk on play, the buying of stocks, takes gold a little bit lower today. That has been the case. Okay, the euro. We left yesterday saying find a place to sell the euro in London. Yesterday's short covering rally was a bit much. And short covering rallies are violent. K-split. Now, for those of you that are new to the profile, this is the interplay of two different time frames. And we would expect to be a little bit higher with a strong close as they get stops above here. But we also recognize that yesterday's action eventually will take the euro lower. So what do we have in the overnight session? We've got a B, we've got a mom, a move out of the middle. Yields another B. We've got London's high at 81. We're currently at 27, so 1150. Sell one. 1175. Sell two. On the buy side, 110 even. Think we're headed lower. Buy one. And we have this breakout way down here that 1050, 1075. So we'll make 1050 for buy two, but well, this should pick up this support that's right in here, and we'll see if that plays. And that's 111, not 110. I misread it. Okay, crude oil. The IEA came out and said, by golly, crude has bottomed. And crude responded accordingly. But just looking at, no matter what the fundamentals say, and the market is oversupplied, Kuwait whacked the market one day this week saying if nobody else cut, they wouldn't cut. Produce as much as they could sell, lift and sell. But when you put all these things together, we're dealing with a very, very strong P. And I, for one, hope the bottom in the crude oil is in. You can see we start up again in B period. So we said 38.50 was kind of the breakout point. If we got through that, then 39. And the low volume number is right here at 39.25. So we're 38.62. So just 39.25, sell one. We'll get through that. 39.75 to 40. Nancy's number. Nancy said we might be going to 40 before this is over. And Nancy looks like she's spot on. 38.25, buy one. 37.50, 37.75, buy two. Again, I think the easiest trade to see is failure to get through, take out 39 and hold it. That means resistance will have held. People will at least liquidate length, and then we'll find out where support is. Markets move, then they stop because they find a price that cuts off the buying or selling. Then you get a counter move where they find out where support and resistance really are. Then they move into development. And if we put those previous 4 days together and take the Globex move out of the middle yesterday, this market is still pointed higher. And we said if we got through 38.50, there really wasn't too much in the way to stop us going to 40. And the world knows there's stops above 40. So we'll see if that plays. On any given day, crude's about as far away from the fundamentals as you can get. Eventually they do weigh on the market, or support it, but on any given day, anybody's guess is as good as anybody else's on how the fundamentals are going to play. Okay, 2,000. That's kind of a round number. We made it up to 02. We got stops above 2,000. We got a strong P. Yesterday's market was sold, and it could have been rumor fact. You know, Draghi came in, he surprised the market, and one of the things that you'll see is that when you come into a news day, there's really three forms of news. There's expected news plus or minus. You know, you expected a bigger number or a smaller number, but it was higher or lower than what you thought. And then surprise, unexpected news. And this is the one, that's the trade that has your name on it. That's the one you just have to bite the bullet when you recognize it. And you have to game, you have to strategize. You have to think about that. What could turn the market on its head all the time? So you don't have to ponder or think about it. So you have expected news, unexpected news, surprise, unexpected news, and expected news plus or minus. So yesterday on the Draghi program, we had expected news. They were expected to cut interest rates by 10 basis points and raise QE by 10 billion euros a month. They raised QE by 20 billion. They gave two-tier structure to their interest rates. And they opened up a new asset class that the European Central Bank could buy. So the news was a little bit better than forecast, but it was expected news. They expected rate cuts and increased QE. So it had to rally a bit to take care of the plus, which is what it did right here. Then we start to get lower highs, and we can't take out this high, and then we get lower highs all the way down as the market sells off on profit taking. So my guess is we had a little rumor fact after trading, after the better than expected news was absorbed. People took profits. All the good news was out of the way. I was long anticipating this good news. The good news is hit a little better, rallies a little bit more, rallies over. I'm taking profits. And I think that's where we are. So we've got resistance at 2000, 2005, and then at 2008, really all the way up to 2017. So the easiest trade to see is going to be failure to take out 2000, 2003. So sell failure to take out this level. And then it's going to be 2007 to 2011 for sell 2. On the buy side, we have the London low at 94, so 90 to 95 will be buy 1, and 80 to 85 will be buy 2. I think what can the central banks do to support the markets? I mean, and a lot of stuff, a lot of chatter was on yesterday. Can the central banks do any more than they've already done? How low can interest rates go? And everybody knows that lower interest rates have not done anything other than take the stock market higher. It has not increased inflation in the way desired or what they tried to engineer for. So can the central banks do any more to help things? Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.